What's up YouTube, Dougie Chong here. Welcome to today's episode where I'll be reviewing Visa stock. Before I get into Visa stock, I just want to reiterate that stocks in general are at a ridiculous level right now. A lot of them are almost at pre-crisis levels. The only justification for such high prices is that all the money that the government is injecting into the economy is causing inflation. And this might very well be the case, and that's why it's important to always hedge your bets and not always be on one side or the other. So as always with these stocks, I'm going to give you my personal take on Visa stock and the company, and then I'm going to take a deeper dive into the numbers. I'm sure that the company Visa needs no introduction, but Visa is the largest credit card company in the world. I like to stress the importance of being a market leader, and Visa definitely checks that box. Being the market leader in the credit card space is especially important because if you've ever been to a merchant where they only accept Visa, it's very inconvenient if all you have is MasterCard. It's not like you can just pay a little extra fee for them to accept the MasterCard. They just straight up will not accept your MasterCard. So while it's good to have both a Visa and a MasterCard, if you had to choose between only one of them, I think you would go with the market leader of the Visa credit card. I think everyone is familiar with the basic premise of a credit card, but they allow users to buy items on credit and then pay their credit card bill at the end of the month. So the question becomes, how do companies like Visa and MasterCard make so much money off giving other people credit? When I started to make this video, I thought that Visa's primary source of revenue was from credit card interest, as a lot of people know that you have to pay interest when you don't pay your credit card bill on time. And this interest is not cheap. It's something like 20% for most credit cards. But this isn't actually how Visa makes their money. They kind of just act as a middleman between the lender and you, the borrower. So Visa's primary source of revenue is actually from charging merchants about a 3% fee for the ability to accept payments using their Visa credit cards. So Visa actually doesn't care if you pay your credit card bill on time. All they care about is that you're spending a lot of money using their credit card. And in today's digital age, it is very hard for merchants to be cash only, and that is really benefiting companies like Visa. I know that I personally like to make most of my expenses using a credit card because it is much more convenient than dealing with actual physical cash. You get credit card reward points, and then you also get to build your credit card history for making other credit applications such as mortgages. I personally have a few different Visa cards and MasterCards, but I've never owned an American Express card. So what are the risks with investing in a company like Visa? Their business model seems pretty bulletproof, right? There are some newer technologies that could give credit cards a run for their money, but things like Apple Pay and WeChat Pay, they're not competitors to Visa because they do use Visa's technology under the hood. I believe there's an app called Venmo that connects straight to your bank account for point-to-point transactions, and I think this would be a competitor to Visa. Cryptocurrencies are another emerging technology for payment transactions, but with any of these emerging technologies, it's gonna take a while to adopt, so investing in a company like Visa is very safe in my opinion. Again, this entire video is just my opinion. I am not a licensed financial advisor. This is not legal financial advice. Now on to the numbers. Visa stock currently trades at $179.47, which is down a tiny bit from its 1-month high. Its 52-week high is $214.17 and 52-week low is $133.93. Both are within the last 6 months. I find it pretty interesting that a company as big and safe as Visa got hit pretty hard with the whole crisis situation. So definitely when I look at that Visa stock chart, when it was in that $140, $150 price range, it was a buy. But what about here at $180? Well, let's look at the 5-year stock chart now. From the stock chart, you can see pretty consistent growth, which is typically what you want to see from a company. And this makes sense from a big company like Visa, which people use on a daily basis. Their PE ratio sits at about 32, which is not that bad considering the S&P 500 average is typically around 20. and their market capitalization is around $350 billion, which makes Visa one of the largest companies in the world. Now let's look at the balance sheet for Visa stock. Their current assets sit at about $20.9 billion, and their current liabilities sit at only $13 billion, which means they have ample room to pay off all their current liabilities if they wanted to. And then their total assets sits at about $72 billion, whereas their total liabilities sits at only $38 billion. So as expected from a company that makes a lot of money off other people's debts, they themselves do not have much liabilities. So in conclusion, is Visa stock a buy in my opinion? Unfortunately, it is not a buy for me right now. Despite having a very good business model and a really good balance sheet, they're just a little too close to their all-time high. But I will be watching the stock very carefully, and if it drops back to that $150 range, I will be looking to buy some shares. That's it for this video, guys. Hope you learned a lot about Visa stock. As always, let me know in the comments below what you guys think about it. Also, don't forget to leave a like and subscribe if you have not already. Enjoy the rest of your Tuesday and see you in the next video.